So in this lesson, we're going to discuss what an XABCD pattern is and how to find them. We're going to talk about how they are measured using both price and time combined with a total of 11 different ratios, and we're also going to tell you why it's important to have them measured this way. And then we'll wrap up by explaining who would want to use them, as well as what markets they work best and what timeframes you would want to consider. So all that is coming up next in lesson 1 of 3 in this introductory program into XABCD trading. So what is an XABCD pattern? So an XABCD pattern is based off of human emotions. So how far up or down does it make price go? But also, and more importantly, how long does it take to make that price go up or down? Because that's all going to be based off of human emotions. So we measure that by using Fibonacci measurements, and we're using those measurements to keep the shape of the pattern and that identification consistent. And again, it's both measuring the price and how long it takes the time to get from one point to another. So how do you find these human emotional patterns that happen in the market? If you wanted to find an XABCD pattern, you would look for any sort of major high or low in the market, and then following that, you would want to see a basic M or a W type pattern. So the M is going to be more for a bullish pattern. We'll get into that in a sec. And if you see a W, you're going to see that for mainly a bearish pattern. So once you have that basic shape, it's time to start measuring, right? We need to know if it's going to validate into a specific category of pattern. We'll get into that a little bit more later. But how are these patterns measured? We talked about how we're using Fibonacci time and that, but how do we go about doing that? In a classic XABCD pattern, there are 5 pattern points. X starts the pattern, and then we're going to have the first 4 letters of the alphabet finish off the remaining 4 points. So X to start, and then A, B, C, D. Each of these are going to be referred to as a pattern point, and then between each of those pattern points, that's going to be known as the leg segment. So if we were to draw in the first leg segment to do our first measurement, we would draw a line from X to A. The first measurement is going to be able to find out how far of a pullback we got from that initial move. So once we have that number, we can move on to measuring the next leg segment. And in total, there's going to be 11 measurements per pattern. Now look, we can go through all 11, but if you're like me, there's no way in heck you're going to be doing this for every pattern that comes out or every pattern that you think is there, only to find out that the measurements don't line up and then having to start all over again. There's no way that you're going to be able to do that manually one by one. You know, we live in a world where we leverage technology to do a bunch of different things, right? We don't walk to work when we can drive. Well, we're not going to measure things manually when we can do them automatically, okay? We'll get into this in lesson 2, but you can use the drawing tools or indicator to accomplish this exact same task in seconds. I just wanted to give you a little bit of an idea of what you're actually measuring and how you're going about doing it with that first leg segment, so you can get an idea of what the tool is going to be doing for you. So here's what I mean. As you can see, it's a lot easier as I use this drawing tool. I click on my 5 pattern points and it's automatically putting in all the numbers and all the measurements that I don't have to do, all 11 of them. So you can imagine how much time it's going to save you. Now when they are correct, if they are all correct, it will be displayed as a color and the name of the pattern will be listed. Otherwise, it's going to remain gray and say the words no pattern. Pattern here, no pattern here. So why do we measure them this way? And the answer is basically consistency. Okay, it's so important to measure patterns the exact same way every single time. That's also why we use multiple dimensions to do so. Okay, time is going to be huge because it doesn't just matter if you're going from point C to point D, but it matters on how quick or how slow it takes to get you there. Think of it this way. If you were waiting to take an elevator to go from one floor to another and both elevator doors opened at the same time and one told you that it wouldn't be using its brakes, it would be free falling all the way to the ground floor, and the other one said it would have a more controlled descent, which elevator are you going to walk into? Which one's safer? See how fast you get from one point to another? It matters for consistency. The more consistent our patterns are, the more consistent our outcomes should be. So who would want to use these? So anyone that trades trends or reversals. It's a little harder for momentum traders to use them, but it certainly can be done, and we get into that with all our education for our members. Mainly though, we see a lot of trend traders and reversal traders, since the patterns can be used in both situations very well, as long as you know how, and we'll get into that in the next lesson too. So what time frame is best to use the patterns? The time frame doesn't matter. In fact, if a strategy will only work on one time frame, I'd be running for the hills. However, the time frame could work out better for you if you're more of a shorter term or a swing trader. See, one of the things that we show you how to calculate is how long a pattern will take to work out statistically based off a database of 1.5 million patterns that we've collected, and you can check that out here if you want to actually see the database. But should you want to expand your knowledge of the patterns, we'll show you how to do those calculations. In short though, longer term patterns will be better for those who can't focus on their charts as often in the day or week, where shorter term traders will probably need to be more attentive to their charts in order to manage their trade correctly. So which markets are going to be preferred? Like the time frames, the markets don't matter. Humans are trading the forex and the futures and the stocks, and those humans that trade the stocks are not fundamentally different than those trading the futures or the forex. The market won't matter at all. You could choose even bonds or anything else if you wanted to. So this is going to complete lesson number 1. Hopefully you've learned something about what these patterns are and what they're showing us, and maybe a little bit about where to use them, and you have an idea of what time frame you might want to use them in. We're going to dive into this deeper now in the next lesson, so stay tuned for lesson number 2. Don't forget to subscribe to these videos. Hopefully you found them helpful, and feel free to leave a comment below, and we'll see you guys in the next lesson.